Some restrictions apply. For complete details, please visit OptimaTaxRelief.com. Individuals and businesses with tax problems. Listen carefully. If you owe over $10,000 in back taxes or have unfiled tax returns, U.S. Tax Shield can help you take back control. The IRS can seize your bank accounts, garnish your paycheck, close your business, and file criminal charges. Our team of tax attorneys can stop collections and get you protected. U.S. Tax Shield offers a price protection guaranteed quote to get you protected today. U.S. Tax Shield is A+ rated with the BBB, so call 800-466-9625. U.S. Tax Shield, 800-466-9625.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. Our guide this month is titled Retirement Tax Efficiency. Mike, when people retire, what are some of the biggest surprises that they receive in the tax department upon retiring?
Well, most folks end up avoiding it, but for a lot of people, when it comes to Medicare, there can be a little bit of surprise when it comes to how those premiums get calculated on a year-to-year basis.
What types of things can factor into where those premiums end up in any given year?
Yeah, so there's something called IRMA, which stands for the Income-Related Monthly Adjustment Amount. And long story short, they base your Medicare premiums on your combined income, but sometimes that you don't really think about items that fall into your income. So let's say you raised your family in this home, and somewhere in the Northeast you end up selling it, and you end up making more than $500,000 on it. Or maybe it's a parent's property or a big stock or a big retirement package. You can actually see your Medicare premiums take a severe adjustment. And that's almost never income that people are thinking about. Like, no, I sold my home. Why should that factor into my Medicare? Well, it can in certain circumstances. And so it is just one area that we look at to say, hey, this is a surprise because it's a tax that nobody faces until they turn 65.
Our guide this month is titled Retirement Tax Efficiency, and there are 2 different ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. the Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here in what is probably the busiest calendar week that I have seen for a combination of economic data and earnings releases thus far in 2024. I don't know that it's necessarily the most consequential week because I don't know that, we're looking at any of these like, oh, this is all make or break. But what I can say is, man, we are going to be busy this week. Tomorrow, we get S&P Case-Shiller home price data. We get FHFA home price data. We get the JOLTS job openings report. Wednesday, Fed going to go and do whatever it is they do. Jay Powell's going to strap on the purple tie, go and do his thing, so we get that coming out. We get ADP employment data, but let's be honest, no one really cares about the ADP employment data. We get Thursday, jobless claims, productivity, and ISM manufacturing. Friday, we get payroll, so we get the jobs report. So that's just on the economic data side. On the earnings side, this morning you had McDonald's report earnings. Tomorrow you've got Microsoft, Procter & Gamble, Merck, AMD all reporting, as well as Pfizer. Wednesday, you got Meta, MasterCard, T-Mobile, and Qualcomm reporting. Thursday, Apple, Amazon, Intel, ConocoPhillips reporting. Friday, ExxonMobil and Chevron reporting. So it is just a busy week, Mike. Again, I'm not sure that I look at a lot of this and say, well, this is, the biggest this or the biggest that, but it's just a lot of still very influential reports that are going to be coming out, and so we're not going to be lacking for topics to talk about this week.
No, I think not. Like you said, nothing in here is make or break for this economy right now. But here's where I do look at this week, Chuck, is we've now had since July 10th this focus on the Magnificent Seven and the NASDAQ sell-off. And I think this week does have the ability to make or break that story, right? If you hear amazing earnings from Microsoft, Meta, Apple, Amazon, then that story's dead. But if they continue what we have already seen and investors react in the same way, which is, yeah, you're doing a lot and spending a lot on AI, but we're not seeing the return, then you could have this play out, this great rotation that we've seen, get exacerbated to some extent. So I think that's what's important about this week. Yes, we'll get jobs, very important, consequential. The Fed meeting should indicate where we're going with interest rates, but that story is kind of baked. The one that, to me, we just don't have a lot of information about yet is, will we see a continuation of this tech sell-off? That admittedly reversed a little bit on Friday.
Yeah, you had, a little reversal over the course of one day thus far on, to kick this week off. reversing as well, but still a ways to go to undo some of the damage that's been done on the tech side of things over the last couple of weeks here. So certainly with those big tech companies reporting, it'll be something that we watch pretty closely. You mentioned the Fed briefly. Expectations for this meeting, Mike, it seems are pretty muted out there, with the exception that, hey, most people anticipate that Jay Powell will guide that, hey, as long as the data continues to be good, we see September as being a live meeting for a rate cut. Is that a fair assessment?
Yeah, according to Chicago Mercantile Exchange, the likelihood of a rate cut at this July meeting is sitting at 4.1%. So almost impossible to happen. And let's be honest, this Federal Reserve has not had any interest whatsoever in surprising people and investors and markets. And so doing anything at this meeting other than signal that September was time to go would be quite the surprise. And they haven't had a history of doing that over the last year or so. I think the question becomes, what is the language change that we hear from them? How do they describe the labor market? What words do they use when describing inflation? And I say that not because any of us are really looking forward to, evaluating what descriptor they use for the labor market, but that's how the Fed gives you hints, unfortunately, is, whether they describe the labor market as very strong, or in transition is hugely impactful for what people think they end up doing in September and beyond.
We got a few stories on interest rates to talk about here. You want to dive into them or anything that you want to cover before we get to that?
No, we can talk about McDonald's earnings later, but I think, until we see the earnings from these massive tech companies, what do we have, $10 trillion between Microsoft, Meta, Apple, and Amazon, somewhere in that ballpark? Oh, plus Berkshire Hathaway might be reporting earnings.
Who?
I mean, between those five, you've got to have a massive chunk of the overall S&P reporting. But until they actually do, I don't think I have a ton to say about it.
Let's just set the stage for earnings this week. We've had 41% of S&P 500 companies report earnings thus far. 78% of companies have reported a positive surprise. 60% of them have reported a positive revenue surprise. Those are both within sniffing distance of your historical norms. There's no huge deviation there to this point. And so far, the blended year-over-year earnings growth rate is 9.8% year-over-year. Expectations before the quarter were a little shy of 9%, but as you noted, you've got some heavy hitters that are coming through here, and so they'll likely move that number pretty significantly before the end of the week even. The S&P 500 also currently stands at a forward 12-month price-to-earnings ratio, meaning the price of the S&P 500 compared to its next 12 months of projected earnings at 20.6. The 5-year average is 19.3 times forward earnings. The 10-year average is 17.9. All this data, by the way, coming from FactSet's Earnings Insight release last Friday. So you still have a market that's trading expensively, but to this point this quarter, companies have been beating earnings expectations. The interesting piece to me, Michael, and I did just go Michael, which means
I saw that.
You know it's serious. You know it's serious.
I was looking in the other direction and not really paying attention until you said Michael. So
well, I could have gone, full name there, and then you really know that, you've done something wrong. But what's interesting to me, companies have beaten earnings expectations by and large. Like it hasn't been a huge quarter for earnings misses or anything like that. And stocks have still gotten punished even with those beats. And that, to me, talks about, hey, expectations versus, reality. And, hey, expectations are high. When you're trading, 21 times future earnings heading into an earnings season, you got to be pretty darn near perfect in order to see, further growth from there. And I think that's part of the reason why a lot of companies that have reported even good earnings, they haven't really moved that much. Combination of that plus market internals and, market structure that's been dictating some of this. But, look, market structure only goes so far. If you report great earnings, you typically end up doing great if everything else is equal, regardless of whether or not the market's doing this, that, or the other thing. The last 2 quarters of earnings that we've had, markets have kind of slogged through them a little bit. And then NVIDIA came and, report earnings both times. And boom, everything rallies because they were just that good. And so great earnings trump whatever else is going on in markets. And the earnings, I guess, the message that I would take is, yeah, the earnings have been good. They've been better than expected. But that still isn't enough right now to overcome the gravity of what we're seeing elsewhere in markets.
We're going to talk about automakers a little bit later in the program, but I feel like General Motors was the perfect example of this, reporting very solid earnings across the board, really beating, especially in comparison to their peers. Tesla, Ford, Stellantis all reporting really disappointing earnings. GM beat really across the board, good sales, strong average car price, and their stock got beat up just because, look, it wasn't good enough in this market. And so that's what we've been seeing. But again, this week, followed by, NVIDIA I don't think goes for another few weeks, but those companies do have the power to change this narrative of, hey, good but not good enough. Will they is the question, or will investors be disappointed?
Quick break here. When we come back, a little bit of talk about the Fed and interest rates right after this on the Financial Exchange.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zodda from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Are you retired like me, and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right, if you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John. Enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, we got a couple pieces discussing the Fed and a potential interest rate cut to talk about here. The first from Nick Timmerhouse in the Wall Street Journal. Nick is the Fed whisperer, so what he's saying is what the Fed is typically thinking. And the title of this is, A Fed Rate Cut is Finally Within View. Not very surprising that we're talking about this as we head towards a Fed meeting where the Fed most likely has to indicate that they are talking about cutting interest rates this fall.
Yeah, and, I think for those kind of scratching their heads on this one, if you listen to the program regularly, you likely aren't. But look, inflation has now come down from that 9% level a couple of years ago to a much more tolerable high 2s, low 3s, depending on which measurement you are using. Unemployment has seen a gradual increase up from 3.4 to 4.1%. And all of those factors are contributing to a Federal Reserve that is now, I think, acknowledging for the first time that, rates are starting to do their job here and we don't want to go overboard and send this economy into a recession. Why not at this meeting? I think, they've wanted to be very, very patient with all of this. And then finally, last week you had a GDP report, which, again, Chuck has pointed out, had some areas of concern, but by and large, when you're printing GDP in the most recent quarter of high 2s, that gives the Fed enough cover, in my view, to wait on this decision until later this fall.
So that's where we stand. And I don't really have anything to add on that, Mike. I think it's just, hey, absent any change in the course of the data over the next 6 weeks, we're going to end up with a rate cut in September.
What do you make of this piece by Kevin Warsh, op-ed piece in the Journal?
I think it's rather bad.
So that's where I was going to go as well. But here's the argument from a former Federal Reserve official.
Right,
saying,
Warsh is no dummy. Like he's no dummy. I mean, this is someone, by the way, who spent 5 years on the Federal Reserve Board of Governors from 2006 to 2011. Graduated from Stanford, has advanced degrees from Harvard and MIT. Warsh is no dummy. So let's be clear about this. He's a smart freaking dude.
So what is he saying that we're not?
But this piece defies logic, and here's what it outlines. It says, I'll quote from it on this, markets are buzzing about whether the Federal Reserve's rate-cutting cycle will begin in earnest this week or in September or November. Few economic decisions are of such misplaced importance. So first he says, look, it doesn't really matter when the Fed starts cutting interest rates.
Now,
okay, like that.
Yeah, that in and of itself, not a bad argument.
Sure.
Because whether they do July or September by a quarter point, not the most impactful thing in the world.
Totally.
Agreed.
He says the Fed's other monetary policy tool, asset purchases, is conspicuously absent from the public discussion. It works differently from the conventional interest rate tool. The Fed's giant, unwieldy financial holdings amount to $7.3 trillion. That's where the real money is found. And I'll quote on a couple other things from later. The surge in federal spending and concomitant... I can't even pronounce that word because I literally have used that never in my life. The Fed's spending and central bank asset purchases in 21 and 22 contributed to the harmful surge in inflation. The monetary base is up 60% since the pandemic. Another measure of money, M2, is up 36% in the past 4 years. The inflation surge over the same period, cumulatively about 22%, shouldn't have been a surprise. And here's where Warsh loses me. The first thing is that Warsh talks about, look, when I started at the Fed, the balance sheet was $800 billion. Well, when Warsh finished at the Fed, in 2011, it was $2.8 trillion. It expanded over threefold in a span of 5 years. Mike, how much inflation was there from 2006 to 2011?
Negative? I
don't know, but
not much.
The correct answer is it wasn't a topic. We didn't talk about it other than, hey, should we be nervous about inflation? And the answer back then was, nah, not really. Beyond that, when we talk about, the other thing that he mentions, M2, which is, kind of a measure of the broad money supply. When Warsh started at the Fed in 2006, M2 was running about $6.8 trillion. When he left in 2011, it was around $9 trillion, expanded by about 50%. Was there any meaningful increase in inflation as a result of that? No. So here's what Warsh is doing that I think is disingenuous here. And it's not to say that I want the Fed to have an $8 trillion balance sheet. I don't have firm views this way or that, quite honestly. If Warsh is saying, look, the balance sheet and M2 went up and that caused inflation, okay, it did. They happened at the same time right now. They were coincident things. But if a relationship is to be true, it should be true across multiple different time frames and empirically testable to say, yes, it went up this percentage this time, and look what else happened, and it went up this percentage this time, and look what else happened. And in the very recent past, like within the last 2 decades, we have multiple periods where the increase in the Fed's balance sheet and M2 did not correlate to any increase in inflation during that same time period. And that's what I find problematic here is Warsh is saying this is the problem, when if you just zoom out a little bit and look at, hey, the last 2 decades instead of a 3-year period, it doesn't really look like the problem.
It doesn't. And furthermore, the Fed's balance sheet has been shrinking, right? We peaked back in the spring of 2022, and we're down a good $1.5 trillion. And
inflation has not gone negative.
So, empirically, I just think the argument is garbage. There are plenty of reasons I think that we can and should focus on the balance sheet, and he does make at the very end an argument that, hey, increasing the balance sheet has led to favoring of capital over labor, and if you had $1 4 years ago, it'd be 80 cents in spending power, whereas if you invested $1, it'd be $1.80, and perhaps some of that is because of Fed balance sheet expansion. Like, interesting ideas that I think we can try and hash out and talk about. But effectively, his argument seems to be you won't be able to control inflation until you dramatically reduce the balance sheet and focus more on that, when facts aren't in evidence, right? We have been raising interest rates, and inflation has come down since the summer of 2022 pretty dramatically. 9% to 3% is a dramatic drop in inflation without any talk of the balance sheet.
The other thing that just bothers me in this discourse, because everything gets framed right now through this populist lens, like, oh, here's why this is hurting Main Street America. Everything can't always be hurting Main Street America. We can't say, hey, the Fed kept interest rates low and that hurt Main Street America, and then interest rates are high and we're like, well, that's hurting Main Street America. It can't be both. It can't be that all the time, because otherwise the question that you raise then is, well, what helps Main Street America? If it's not high rates or low rates, what is it? Middle rates? What does that even mean? Middle compared to what?
No Federal Reserve? I don't have an answer for you.
And I'm not saying that like the average American should say they're doing great right now or doing terrible right now. What I am saying is we can't just say that every policy that's enacted is inherently bad for middle America, unless we actually believe that every policy is bad. In which case, I just don't know what to do. I just don't know what to do then. Let's take a quick break here. When we come back, we've got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question. And the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable and it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000. There's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are mixed territory to begin the week as investors brace for a major week ahead, including earnings from Apple, Microsoft, Meta, Amazon, and many, many, many more, in addition to a Fed meeting on Wednesday and a jobs report on Friday. Right now, the Dow down by 166 points, just under 0.5%. S&P 500 is edging by 4 points higher. The NASDAQ is up by about 0.5% or 77 points. Russell 2000 is flat. 10-year Treasury yield is down by 2 basis points at 4.17%, and crude oil down about 0.33%, trading just below $77 a barrel. McDonald's reported second quarter earnings ahead of the open this morning, missing street expectations, where the fast food giant saw its sales decline for the first time since 2020. Comparable sales declined 1% from a year ago as it saw diners cut back. Shares of McDonald's, however, are up 3.5%, and Chuck and Mike will have more on McDonald's coming up here on the show. Meanwhile, shares in Coinbase are up by about 1% in reaction to Donald Trump's remarks over the weekend, saying he intended to create a national Bitcoin stockpile if elected president. Bitcoin, by the way, is up by about 1%, just below $69,000. Elsewhere, a jury ordered Abbott Laboratories to pay $495 million after finding it failed to warn that a baby formula increased the risk of bowel disease. That stock is down by 4%. And Disney shares up by 1.5% following a stellar opening weekend at the box office from Deadpool and Wolverine, where the Marvel movie raked in more than $200 million, making it the strongest debut on record for an R-rated film. I'm Tucker Silva, and that's Wall Street Watch.
Mike, I think we have to dig in a little bit on that McDonald's earnings report, if that is cool with you.
I mean, yeah, stock's up 3.3% on a miss, so what's a miss?
Well, let's talk a little bit about what's happening here. So, same-store sales. Year-over-year decline for the first time since 2020. What are the possible reasons why this could be happening? Let's just put the different possibilities out there. Option number one, people are saying, hey, you know what? McDonald's has gotten too expensive. I don't think that it works for me, and so I'm going to go somewhere else, or not eat out, cook food on my own, whatever it might be. That's one possibility.
Sure.
Possibility number two, hey, you know what? I'm doing better. I used to get my burgers at McDonald's. Now I'm going to Five Guys or Shake Shack instead because I got a little extra money in my pocket.
A variant on that, the fast casual space, Chili's and Applebee's have been really advertising against the McDonald's to try and draw customers there. So whether it's another fast food chain that is higher priced or more of a sit-down restaurant, again, that's probably more impactful in California for reasons we'll discuss later, but maybe that's playing a role as well.
Another similar option, hey, you know what? McDonald's isn't giving me the best bang for my buck. I'm going to Wendy's, Burger King, something else in that, exact fast food space. When we look at the other data that we're seeing out there in general, it would seem unlikely to me that a lot of people are saying, I'm going to trade up from McDonald's right now, given the other indications of lack of pricing power at the lower end of many markets. Is that fair?
Would agree, yeah. And McDonald's seems to be making that same assessment with some of their discounts that they're throwing out.
They're extending, that $5 value meal promotion, I think, through the fall or indefinitely, something along those lines.
Yeah, and an important caveat on their most recent earnings here is that we didn't really see the impact of that in this quarter's earnings. So they just rolled that promotion out on June 25th. I think it was their CFO saying that it was pretty successful. They are planning to continue it, but basically not in the earnings that we are talking about right now. So those comp store sales falling by 1% did not really include any impact of that value meal and all the promotion that goes along with it.
So a couple things on this. The first is, hey, McDonald's reported, declining same-store sales. Why is McDonald's stock up? Reason number one, most McDonald's franchises and most McDonald's stores and most of their revenue doesn't come from McDonald's operating its stores. They're franchised.
Yeah.
And so as long as McDonald's corporate is collecting its royalties, its licensing, everything that it gets from its franchisees, hey, the foot traffic, yes, McDonald's needs to, help the menu and this and that to keep its franchisees happy, but ultimately that's a franchise problem to McDonald's, not a McDonald's problem in a lot of cases. So that's part one. The second piece here is, as Mike said, hey, the introduction of those new, deals came towards the end of this quarter, and so there's hope that, yeah, we're seeing improvement, and so things might get better on that front. But part of that is also something that I think we have to be aware of in terms of, hey, if you're coming in with a product that you are now pricing below where you used to price it, typically ends up hurting your margins. It's not like McDonald's suddenly says, hey, you know what? We unearthed a vast, cache of beef that was hiding under the Appalachian Trail, and we're
serving it to our customers.
We're going to release this, cache of beef from the mountains, and that's how we're going to get prices down. No, it doesn't work like that. McDonald's is saying, you know what? We're going to have to take a margin hit on this, and that's how we're going to have to get through this in order to fight for market share. And there are two things that you wonder about when you start seeing companies doing this. The first is, hey, if they want to maintain their margins, do they start cutting headcount? It's one piece that you wonder about. The other is, hey, if they start doing this, and then other companies that are competing for that start doing this as well, how much does it impact margins overall if companies just say, look, screw margins, we're just going to compete for market share? What does that do to profits? And if profit growth slows, what does that do to highly priced stocks? Those are my questions on it.
Yeah, this is a corner of the market. This is not occurring in every area. You're not seeing uniformly price cuts going on from McDonald's burgers to John Deere tractors, but you are seeing this concentration on, hey, comp sales are down. What can we do to get people in the door and make them feel like they're not getting ripped off at the moment because they keep telling us that they are strapped for cash? And we will see if that foot traffic is enough to make things up. I thought the other interesting piece about McDonald's earnings, though, was this is not just a U.S. problem. Their comp sales
it's everywhere.
Were down in every single geographic segment in which they operate. And it's telling. And we've seen, global consolidation around this problem of inflation and people's pocketbooks running dry, but that was pretty compelling to me that every single geolocation was seeing a comp sales decline.
And what's interesting to me is, as a proud McDonald'ser, I think that's what they call us.
That's what you call yourself?
Yeah, a McDonald'ite?
Yeah.
Do you prefer McDonald'ite or McDonald'ser?
I think you just go with a Ronald.
No.
Yeah.
No.
Yeah.
No.
Yeah.
It's not that. But I think that the buying experience at McDonald's is the best it's ever been. It is fast. You've got the app, which, by the way, the interesting data point that came out of this to me, only 25% of McDonald's orders are using the app right now. A lot of room for improvement on that because, let me tell you, I don't know how anyone orders fast food or fast casual anywhere without using the corresponding app now, because it makes the experience so much better anywhere. And if you do want a place for improvement for McDonald's to, improve efficiency and yada yada, hey, getting a higher percentage of orders coming in via the app would be a big one in my opinion, because they're lagging behind some of their competitors right now in that space. They also, I haven't seen any reports of this in the wild yet because I don't know where they built them. But remember, about a year ago, they announced that they were testing drive-through only restaurants with 4 lanes of drive-through. And I'd be curious to see how those are working out given the evolution of eating habits and things like that. Being able to, move from kind of what currently is the gold standard, which is Chick-fil-A's 2 lanes of drive-through to 4 lanes. I'm not great at math, but that's double the capacity, Mike.
Yeah, I wonder if that trend's behind us, but I guess we will see. I don't know. I don't see the same trends from early 2020 when people didn't want to dine in restaurants anymore. I feel like we've now reverted back to dining habits of 2019 again. So I don't really see the purpose for the 4-lane drive-through with no dine-in section at McDonald's personally.
I just think it would be, what if you could put one of those on a highway, just overhanging the highway, so as you go through, as you go through one of those tolling checkpoints,
they hand everybody a Big Mac?
They just pop it right down, right where they're taking the picture of your license plate.
Put it right on your fast lane and boom.
A little bit of co-branding. In a hurry, why wait? Snickers and McDonald's. And your toll.
Yeah.
Let's take a quick break here. When we come back, we'll talk a little bit about the United States revealing its latest security concerns around TikTok and its parent company, ByteDance.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zodda from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Mike, let's talk a little TikTok here. There's a piece from the Financial Times, and it's headlined, "The U.S. reveals security concerns around TikTok and ByteDance," and basically it all seems to be coming back to the fact that they are reportedly finding evidence that U.S. user data is making its way to China, despite ByteDance's claims to the contrary.
So let's just talk about where we are and where we've been on this TikTok issue. So in April of this year, Congress approved a bill banning TikTok. That would begin in January of 2025. This is after former President Donald Trump attempted to do the same thing via executive action. That was blocked by the courts. TikTok immediately filed an appeal, and that's where this is. My guess would be that they will continue to appeal this, and we might not even have a resolution by January of 2025. But nonetheless, this hearing is all about what Chuck just mentioned. Is there enough of a national security concern to, admittedly, allow something that would probably never be done with a U.S. company in terms of the ban that we are talking about? And the evidence that's going to be thrown out there probably will not be, at least for us, the average consumer, not be terribly disclosed very well, because it probably contains a whole bunch of national security issues that are secretive and can't be disclosed. So the quote here from the article that I took away was, "ByteDance and TikTok Global have taken action in response to Chinese government demands to censor content outside of China." That in and of itself should be enough for this ban to go forward. But obviously, we're not going to see the evidence of that. We're not going to see any sources of that, because it likely would compromise any of those sources that we use to gather that information. And that's where TikTok likely wants to make this a very public type thing, and I don't know how it moves its way through the court systems.
Yeah, this is the problem, is the stuff that you're dealing with is likely classified to the extent that the DOJ and whoever else is involved can't reveal most of it. And as you noted, if TikTok's trying to make this something that is fought via the court of public opinion, which, look, for multiple reasons, TikTok would want this. A, for what I just said. B, look, TikTok controls a platform in which they can decide how they want to shift their algorithm to promote what they want to their own users. But if you have to fight this publicly, it's going to be something that is much harder to do, and it makes the outcome, I think, that much more uncertain, in my opinion, as well.
I really can't think of another example here of something this much in the public eye that just won't be able to have public information about, right? TikTok is an immensely popular application. I don't know how many U.S. active users they have, but you can imagine those users getting extremely frustrated that there are these allegations of spying and national security concerns, and yet none of the evidence is actually presented to anyone out there for the classified national security reasons we just talked about. But look, this is an application. To me, the cases that the government is laying out here are some of the more innocent ones, right? Like, yes, the Chinese government could censor content on this platform. They could, censor content and deliver content to certain people in certain swing states to sway the vote. They could interfere with our democracy. Unfortunately, I think those are some of the probably pretty easy ones for them to do. I also think of all the geolocation tracking data, and I've talked about this concern before, where, if the Chinese government really wants to bribe, say, somebody working in the brand new semiconductor facility being established by TSMC in Phoenix, Arizona, then what do? You just take a look at all the geolocation data for everybody using TikTok that goes into that one facility, and you attempt to bribe or threaten or do whatever you can based on that geolocation data. If the Chinese government wants to take control of that information, there's very little that would prevent them from doing so today.
Here's a question that I think is worth asking on that then. TikTok is not the only Chinese-based phone app that is being used widely by Americans these days.
Right.
You got a bunch of these shopping apps. What is it? Temu, and there's another one also, right?
Shen and
Shine,
Temu.
yeah.
Yeah.
So if you look at these companies, look, they've got apps as well. You think they don't do geolocation tracking as well in order to determine, where you're buying stuff and what you might want to buy? Of course they do.
Yep.
And so if we're concerned about that information getting to China, I think a very valuable question to be asking is, hey, why are we just focusing on TikTok and social media if that's part of our concern as well?
And that might be the problem with the bill that was written, right? This was a bill written by Congress that specifically called out TikTok, rather than saying social media companies owned by parent companies that do business or that are headquartered in these specific countries. And that might be ultimately what the problem is the wording of this bill from, not that I'm any legal scholar, but when you single out a single company rather than talking about a entire industry of concern, I think you might have some problems through the court system. So we will see. I think what makes TikTok special in this example is there are a multitude of examples. Like, yes, Temu and Shen might have geolocation data. TikTok has the geolocation data. They have the ability to influence public opinion on different issues. They have the ability to censor content that goes out throughout the world. And so, there are just multiple avenues from which the Communist Party could control content in the United States, and I think that's extremely problematic, not just from one perspective.
And we don't have any great way of dealing with this. It's, again, it's something where you play whack-a-mole if you try to get micro with this and be like, oh, well, we just want to target like this small little area. Well, okay, the Chinese Communist Party is going to figure out ways to get around what you're doing. It's a lot harder to deal with it defensively if you're trying to, pick these things off one by one as far as the potential threats. So I don't have a good way of doing this, because the other piece is you can't just say, hey, we're going to block, the install of all apps from China. Like, that doesn't really work either. And I don't know what the best approach is or what the best way to handle this is, but it's not easy, and it's going to be messy as we try to navigate this. Let's take a quick break here. We got a whole bunch coming up in hour 2 of the Financial Exchange. Stick around. A whole lot more to come.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us, so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is all about retirement tax efficiency. Mike, let's go through some of these items that people typically hit in retirement as key drivers of income. Let's start with Social Security and its taxation.
Yeah, so for only about 40% of American households is Social Security actually taxable, but it's a pretty low threshold where it does become taxable. There's a combined income calculation they put through, and up to 85% of your Social Security benefits can be taxed depending on your income.
Other places that retirees typically generate income, interest from bank accounts and CDs and things along those lines. How is that typically taxed? Any changes for retirees?
Yeah, so no real change other than all of your other income is going to adjust, and so the rate at which you pay might change. But you're going to be taxed federally as well as by your state if it has an interest or income tax on the interest generated from something like a CD. Whereas if you're generating it from some other tool, such as a U.S. Treasury bond, that interest is not taxable, at least at the state level.
What about when we look at IRAs and Roth IRAs? People have been contributing, but now they're finally withdrawing once they retire.
Once again, in most states, federal and state taxes, if your state has an income tax. The one nice thing there is you're not facing the FICA taxes that you paid while you were working, but everything else is coming out of those IRAs.
And Roth IRAs should be tax-free after the money's been in for 5 years. The guide this month is titled Retirement Tax Efficiency. 2 different ways to request it. First, by calling 800-393-4001. Second way is by visiting ArmstrongAdvisory.com. That number again is 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
A little bit after 11 here on the Financial Exchange is Chuck, Mike, and Tucker with you. Taking a quick look at markets, the Dow is off 125 points, the S&P is down 1, and the NASDAQ is up 34. So flat to mixed market right now, no clear direction at the moment, and we will check in on markets as we continue through the show. But we've got a guest joining us to kick off this hour of the program. We're joined here in studio by Joe Bisciotti. Joe is the commissioner for the U.S. Virgin Islands Department of Tourism, and he's here to talk to us a little bit about what is going on down in the Virgin Islands these days. Joe, thanks so much for joining us.
Thank you. Thank you for having us.
Joe, when we look at the amount of activity that you're seeing, talk to us just a little bit about, how things are going in general, how much you're seeing in terms of tourism and business activity down there.
We're doing extremely well this summer in the U.S. Virgin Islands, coming off a very, very strong winter season for us, St. Thomas, St. Croix, St. John. Things are looking very good. People still want to travel to the U.S. Virgin Islands, even in the summer, which for us has been historically a seasonal business. What we found over the last 2 years, and even into when we were in the height of COVID, that people have decided that it's okay to travel to the Caribbean in the summer as one of the vacation spots, and more importantly for us in the U.S. Virgin Islands, the U.S. Virgin Islands seems to be a destination of priority and choice.
What are you seeing as the biggest thing that's driving people to make that choice? Obviously, a lot of different choices. Why are people saying, yeah, I want to do the Virgin Islands right now?
Yeah, I think we've been very effective in our marketing. We do lots of things up here in the New England area. We have a deal with the Red Sox. We do stuff with Armstrong Advisory here. We do similar things in New York City with the New York Jets. We do similar things in Chicago. So major urban and big populous areas have helped us, because most importantly for us, particularly for stayover guests, is you need direct lift into the territory.
Sure.
So we have direct flights out of Logan, out of JFK, out of Newark, out of O'Hare, Charlotte, Miami. So when people find that they can get to a destination in under 4 hours without stopping, that helps. Secondly, I think what helps is no passport is required. So it's a U.S. territory. You don't need a passport. We always have that one friend, uncle, niece, somebody that doesn't have a passport,
Sure.
or it expired, or oh my gosh, I just found out. With us, you don't have to worry about that. You can come in without a passport if you're a U.S. citizen and leave. And then I think thirdly, I think people have recognized, particularly now with the level of uncertainty in the world, that if they go to vacation, they feel safer and more secure if they travel under the U.S. flag, which, of course, we provide in the U.S. Virgin Islands.
When you talk about the different islands, I know that St. Thomas was ranked the #1 trending destination by Expedia. And obviously, look, a whole bunch of places that people can choose. What about St. Thomas in particular is drawing people to it right now?
Yeah, I think that was great. That was a huge win for us because, there were the big Las Vegas, New York City, Tokyo, major world capital cities.
Sure.
That wanted that we came out #1 as a small dot in the Caribbean. But I think what people are finding more and more is you have the conveniences of everyday life that you get in the U.S. Your ATM card works, your cell phone works, your health card works if something doesn't go right because we are U.S. territory. And I think that combined with of course, the wonderful beaches, St. John, Trunk Bay, also just recently was named #1 beach in the world. So
wow.
#1 beach in the world. So you have the opportunity to visit these landmarks. And I think lastly, we have a very warm, welcoming people, and the culture continues to permeate in everything you do in terms of the food, the arts, the music. So if you want a laid-back week or night, you can get that. If you want to go out and mingle amongst the people that live on the island, the residents like myself, you'll see us out and about. And if you just choose to have a secluded day trip on a boat between St. Thomas and St. John, you can do that too. So it allows for many different things to happen depending on your mood for a given day. And of course, we have lots of airlift coming in from the continental U.S., which helps. So it's not a hard choice to make.
You've mentioned the air travel choices a couple times, but for folks who might be more into cruises or things along those lines, what kind of options are you seeing out there these days? Has that been something that's been growing for you as well?
Well, cruise has always been the backbone of our tourism product. Mm-hmm. Of course, during COVID, we didn't have a cruise ship for 18 months.
Sure.
But now, this year, I can say that cruise is back as strong as it's ever been. One of the things that has happened, and we've seen the rebound, is early last year, there were only the hardcore cruisers were cruising. Then you got to the end of last year, people were like, oh, yeah, I think cruise is back. I think we should do it.
Yeah.
This year, you're seeing like people who may have dibbled and dabbled in a cruise in the past are saying, well, instead of going to this particular city, let's just jump in a cruise. We could hit 6 or 7 ports and make it. And that's what we're seeing now. So the numbers on cruise are up significantly for us in the USVI. But more importantly, the load factors in the ships are almost 100%. Mm-hmm. So they're coming in full. So which means more people are off, which means more people are shopping, seeing the tours of the islands. And, of course, for us, there's a double whammy, right, in a good way, which is 30 to 40% of people that see the U.S. Virgin Islands, the first time they see the U.S. Virgin Islands is on a cruise ship when they're there for 6 or 7 hours. So if you come off, you have a great time, you're like, honey, next vacation we're going to the USVI, and that's been working well for us.
We're starting to get to the point where, families are starting to talk about, hey, kids are heading back to school. Everyone's kind of, getting ready for that. Not quite yet. It's still July, but by August 1st,
I know our schools in the U.S. Virgin Islands start back on Monday.
Yeah, I know a lot of the southeastern U.S. is in the same boat where they start then. People start to think about holiday trips and winter trips as the kids get back into school. When you look at that, any types of winter or holiday deals or any booking tips as far as making sure that you can get what you want out of a trip to the Virgin Islands?
Yeah, what I tell people, because it's funny you ask that, because over the last 4 or 5 days, I've been having a lot of people that have been coming to me. Something must be going on in the U.S. because maybe the schedules have come out with the kids or vacation pinches are coming up. So, like, John, I just learned that I got a week off for Christmas week. You think I need to book now? And I'm like, yes, you need to book now. I wouldn't wait. I wouldn't wait. I would lock it in. Same thing that's happening, because what we're finding is that we're a destination that is not necessarily deal centric because we are high in demand. But what I would tell you is you get for what you pay for. The experiences you want are there. The services and amenities in our properties, hotels, timeshares, second to none. And, of course, if you choose to have the other option, which we have almost 50% of our housing inventory is sharing economy, Airbnb, VRBO, home away from home. So there are many options for you on both sides. I would definitely book now because I think that the opportunities for you to get exactly what you want at probably the best pricing is now. But we do expect a busy winter season.
What about events that are coming up in the winter season? What kinds of things are happening on the islands that people might be interested in attending?
Yeah, if you're a boater, we have a couple boating regatta type weekends that are happening and trade shows that happen in November in St. Thomas. Our big cruise and Christmas festival happens the last week of December into the first week of January in St. Croix.
Oh, very cool.
Yeah, very, very nice. St. Croix is our biggest island, and it's probably, if you talk to most people, our most laid-back island. So if you're looking for laid-back, outdoor adventure, you know, things move where the pulse beats a little slower, that's where you want to be. Our Cruise and Christmas Festival is a wonderful opportunity for people to come in and experience the culture, the food. Of course, Carnival is our version of Mardi Gras or in Rio.
Does that happen around the same time as Mardi Gras, or is that a different time?
No, Mardi Gras is right before Lent, but ours is right around the Christmas season. So it's called the Christmas Cruise and Festival. It's in St. Croix. We have 6 to 8 nights of free, top-notch entertainment in our village. So as people come in, and it's almost like a music festival kind of feel where there's full culture.
Oh, okay. Yep.
So like if you're in the continental U.S., I always equate it to having, the country fair mixed with the music festival at the same time in the same venue.
Sure. Fantastic. Well, Joe, I appreciate you joining us today. Thank you so much for the time, and we'll certainly check in with you as we head through the rest of the year
Perfect,
here. But thanks again for joining us.
Thank you for having me.
That is Joe Bischulte, the Commissioner for the U.S. Virgin Islands Department of Tourism. We're going to take a quick break here. When we come back, we've got trivia, and then we're talking about market volatility from last week.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zodda from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only. Well, our Olympics trivia has come to a close after the interesting opening ceremonies on Friday, to say the least. So today we're beginning a new theme for trivia. For the next couple of weeks here on the show, we'll be looking back at the 1980s. There you go. So here's our trivia question for today. What was the highest grossing movie of the 1980s? Once again, what was the highest grossing movie of the 1980s? Be the 8th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 8th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Tucker, what's the best opening ceremony you've ever seen?
Not that one.
Weren't a fan.
Nope. Not at all.
What'd you struggle with most?
The sketches that were going on in between all the showing of the athletes and everything. I don't know what that assassin-looking person was running through the sewers with kids, or the whole library thing with the romantic novel. I didn't get it. I don't understand what happened or what I saw and why it was 4 hours. I don't get it.
Too long is the biggest thing, in my opinion. Along with, I didn't understand why some of it was like pre-shot.
Right.
And then some of it was happening live. That didn't quite click.
They were guys floating around on pogo sticks and swaying back and forth.
But you got guys on pogo sticks in every opening ceremony.
It was an acid trip.
But that happens everywhere. Like, every opening ceremony has something where you look at it and you're like, I have no idea what this is.
What's your top?
I got 2.
I'm going... Sorry, okay, you go first.
1996, Atlanta. Tough to top, Muhammad Ali lighting the torch. Just talk about the moment there. And the other one, just for the pure pageantry of it, Beijing 2008.
So Beijing was top of my list as well. And I don't have a firm recollection of 96. I'm sure that it was pretty powerful, but it wasn't something that I was tuning into quite as much. Whereas, Beijing, it was pretty powerful. Have to give it to him.
Other things that I struggled with, the fact that they did it on the River Seine made it just horrible to watch. It was like the camera angles were all a mess. Like you couldn't get a sense of where anything actually was. There was no sense of place that you had because it was happening over this long stretch of river, and it was just a mess because of that. Like I couldn't tell where anything was happening.
The last 10 minutes when they lit up the Eiffel Tower, that was the highlight for me.
Look, Celine Dion.
Oh yeah,
my goodness,
highlight.
Wow,
highlight.
Amazing. Other things that I really liked, the metal band Gojira.
Yeah, that was good.
Playing on the side of, I was like, okay, this is cool. I might not quite get it, but yeah, we're hitting something that's at least a little bit different and really, really giving me something here. The pogo, everyone's got guys on pogo sticks with clown hats on and stuff. You see that in every opening ceremony, and you're like, I don't understand how this represents anything. I would have liked a few more mimes being in Paris.
Yeah, I was going to say, you guys didn't know that pogo sticks and mimes were a huge part of Parisian culture?
Would have liked more mimes. It's just, get as many as you can. Because, after all, a mime is a terrible thing to waste. Let's talk a little bit about last week, Michael. Peace, excuse me. Peace here in the Bloomberg. That sudden market drop was scary for investors, but long overdue. And it talked about something we covered last week a little bit, which is, hey, it had been 17 months since the last 2% drop in the S&P 500, and that was the third longest stretch in history that we've gone there. But ultimately, drops like this are more normal than anything else, and so even though it felt scary, it was more of a return to normal market movement because these things tend to happen on a pretty regular basis.
They do. What did you say? This was the third longest time we had gone without a 2% drop in the history of modern markets?
Yeah, third longest time in the history of the S&P 500, and normally about 3.5% of days, or around 8 of them a year, on average, tend to be 2% drops in markets. They do tend to cluster, so it's not 8%, or it's not 8 days every year. Some years you have none, some years you have 15, some years you have 20, but it averages out to about 8 days a year, and we just hadn't had one in a year and a half.
So, yeah, I mean, I recognize it was a bit of a wake-up call, and I'm also not calling it insignificant, right? Was it the beginning or a real marker of this great rotation that we are seeing? Will that continue? I don't know. But the angst that I think people felt what might have been misplaced, right? This is a pretty normal course of business. I think the point that I had made at the time last week, and I would still reiterate this, is that there's a fair bit of firsts and stress going on in things that are not financial markets, right? We talk about the last 5 weeks in politics, just a number of firsts. And so what I worry about is the ability for emotion to remain uninvolved in investing. And we've talked about this at length, but really one of the worst places to have your emotions play out is in your investment thesis. And I guess the only words of advice I would have would be, if you find yourself in a place where it clearly is starting to influence things, then try and take a step back and really look at the big picture, because for most people, even with the 2% losses and the fact that the market flipped today, we were in positive territory in the S&P and NASDAQ this morning. We're now in negative territory. If any of this is starting to get to you, you do really have to take a pause and think about what that means for you. And maybe it means that it is time to make a change, but a 2% market drop shouldn't be the thing that suddenly makes you realize, oh, I'm not doing this right.
No, there are some years, I believe 2008, according to the data I saw, 16% of trading days saw a 2% drop during that year. So you do the math out. Again, there's 250 trading days in a year. That meant there were almost 40 days in 2008 where the S&P fell at least 2%. And granted, that's one of the more extreme years that you can have, but look, if you average the last 18 months in that, you're right at kind of that 8% average. Actually, no, that's higher because it's 3.5%. It's 8 days a year. But look, you can have years of real meaningful volatility like that. I'm not saying that they're good, but they do happen in markets. And if the thought of that makes you say, I don't know if I can handle that, the time to address that is before that happens, because you're probably going to see, maybe not, next year, maybe not the year after, but if you got, a retirement of 20 or 30 years ahead of you, you're probably going to see one of those years in your lifetime. It's the unfortunate reality of equity markets. Volatility is a feature of them, not a bug. They are built to be volatile, and they can be so on an unpredictable basis. Let's take a quick break here. When we come back, We've got the trivia answer, and then we'll talk a little bit about... We got bonds to talk about, and also 401ks, a little bit of chatter on them when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
There are many factors to consider when planning for your retirement, including the importance of your tax liability. This is Mike Armstrong from the Armstrong Advisory Group. Reducing tax liability can be potentially more effective than chasing higher investment returns. If you are nearing retirement and need to understand how to help your investment approach and limit your tax liability, call us at 800-393-4001 and request our new guide called Retirement Tax Efficiency. We'll educate you on ways to create a tax-efficient strategy, as well as the basic steps that make up a sound retirement plan, including how to protect your money in a down market. Call 800-393-4001 and get your guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia question today was, what was the highest grossing movie of the 1980s? Well, that would be E.T. the Extraterrestrial. 1982's E.T. took home the crown of highest grossing movie of the 80s, bringing in nearly $800 million. The Empire Strikes Back was number 2 with $550 million. Winner today of the Financial Exchange Show t-shirt was Matt from Weymouth, and Matt is also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine-in only.
Mike, there's a piece in the New York Times today. It's titled The 3 Biggest Mistakes You Can Make with Your 401k. And interestingly, none of them that are mentioned in here have anything to do with your actual investments.
Yeah, and for that reason, I think perhaps they're not outlining the true biggest mistake, which was talk to anybody who liquidated their 401k in March of 2009. So you can make bigger mistakes than the ones that the New York Times is outlining here. So beware, and that's probably the worst one you can make is getting panicked and having the wrong asset allocation and then permanently locking in terrible returns during times of extreme market volatility. So that's probably number one, but admittedly, hopefully most people aren't making that one. They instead call out 3 that I think are
still big ones.
Actually fairly common and pretty big mistakes. I mean, so one would just be not contributing early enough, and I think at this point, if you haven't heard of the effect of compounding interest at this stage, then you've been under a rock. But obviously,
even Einstein knew about it.
If you're starting your savings in your 50s, then it's going to be a lot more difficult to get to the number you need to compared to whether you start in your 30s, for example. 401ks have gotten a lot smarter about this, and ERISA has adapted things to allow for companies to say auto-enroll people, to automatically increase how much they're putting into their savings. So I think those have all been really helpful first steps. But, if you have hopped around jobs a couple of times, you might, for instance, be under the assumption that, oh, yeah, I had my previous employer at 10%, so I'm sure that's where my 401k is now. But if you dropped around to another employer, they might have started you at 3% or 5%. And so there is not necessarily a standard across the board there. And I think that would be one of my critiques of all of the automatic stuff that has happened with 401ks is I think some people have been lulled into maybe a false sense of security that, oh, my employer is just going to take care of it for me, and I don't need to pay attention to this stuff. And the fact of the matter is you do. The other 2 that they outline, failing to take advantage of your 401k, i.e. get your full employer match is the main thing that they're talking about there. But I'd also say, a lot of other key features of 401ks are, should I be contributing to traditional or Roth? Which bucket should I be putting my money into has a huge impact as well. And then, admittedly, one of the biggest mistakes that people can make is kind of treating that 401k as a bank account. And we've seen the numbers. Vanguard has shown that 13% of workplace savers borrowed from their accounts last year. 3.6% took hardship withdrawals. And I'm not going to say that this is universally always a bad decision, but I think when you have 13% of people borrowing from the accounts in a single year, it certainly indicates that maybe people are treating this the wrong way in the first place. Does anything else that jump off the page to you, Chuck, as a real mistake, a common one that you see?
I think the ones that you discussed are probably the biggest that are out there. I mean, in particular, I just want to go back to the one about 401k matches. It's literally an employer telling you, I want to pay you more compensation, and all you have to do is put money into this account in order to receive it.
Yeah.
And again, the employer's not even making you negotiate for it. It's just, no, I want to pay you more, but it's going to go into this particular account. So if you're not doing that, and regardless of whether or not you think that you want to be contributing to a 401k or not, I'm not here to make generalizations, but if you're rejecting compensation that your employer wants to give you, it's hard to think of a case where that's a good idea.
I guess here would be my overall takeaway. The New York Times piece here has 3 items that are big mistakes that people make, none of which require you to be an excellent stock picker or investor to correct, right? Like, none of this requires you to have a lot of knowledge about how markets perform in bull markets. They don't require you to listen to this program and know what's coming up with tech earnings, or even know that tech earnings are occurring this week. Like, all of these are easy, simple things that almost anyone can correct, so long as they just put in a little bit of research to understand what the options are with their employer. And I think that would be my key message today is, if you are working and saving towards retirement and feeling overwhelmed by these types of decisions of how much I should be putting into my 401k, whether or not I should be utilizing the Roth, all sorts of questions that will impact your ability to retire and retire comfortably. I know that they can be overwhelming, and working with an advisor is oftentimes the easiest step you can take to solve these problems and feel confident in your decision-making process. If you have questions like this and are looking for someone to work alongside you to evaluate all of the financial questions as you are looking forward to that future retirement date, give the folks at Armstrong Advisory Group a call. Allow us to sit down with you and consult with you on all these questions, from life insurance to health savings accounts to 401ks, and building out a plan for your future. You can call our office, the Armstrong Advisory Group, at 800-393-4001. We also have the ability for us to call you back at a time that's more convenient by going to armstrongadvisory.com and clicking the Get Started button. But we have offices throughout New England, and we focus entirely on this process of developing a plan for your specific retirement. That phone number, once again, is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, there's a piece in the Wall Street Journal today. It's titled, "Investors Embrace Bond Funds Before Rates Start to Fall." And I'll quote from it here. U.S.-listed fixed income exchange-traded funds have taken in nearly $150 billion through late July, a record to this point in the year. When looking at mutual funds and ETFs together, taxable bond funds were responsible for nearly 90% of net U.S. fund inflows in the first half of the year. Now, it doesn't specify, exactly where that money is going, whether it's long-term, short-term, intermediate-term, treasuries, corporates, munis, don't know.
Bond markets are massive, far more significantly large than equity markets. So,
yes.
Yeah, could be going anywhere.
Yes. And the question is, hey, is this, good or not? Are investors making the right bets here effectively? And the answer is, look, we don't know until after the fact, but we can look at some historical things, historical data, just to inform us on this. And I'm going to quote here from John Hussman, who is an investment manager. He runs a firm called Hussman Funds. And generally, he has a fairly horrible track record of actually managing money in his funds. They've underperformed for decades because he keeps expecting stock prices to collapse, and they just haven't for 20 years. So, admittedly, he's really bad at actually managing money, but he's a smart guy when it comes to looking at things and being like, hey, this is what has happened in the past. So those are two things that you have to separate. Like, he's bad at the actual product creation, but he's a smart guy, and you have to still look at some of the stuff that he says and say, okay, does this mean anything? So what he looked at as an example, he put up a few different charts this morning that dovetail nicely into here. The 10-year Treasury. He says, look, in the 12 to 18-month period following the start of a recession, what does the 10-year Treasury do on average? And he looks at all the recessions since 1957 and then puts a median and an average out there. And for the 10-year Treasury, if you look over a 24-month time span of all those recessions since 1957, which there are 10 of them, I believe, the median is that the 10-year Treasury yield goes down like 20 basis points, maybe 30, and the average is that it's flat. So basically, the 10-year Treasury in that small sample, just in the last 24 months after a recession, doesn't really move. The inflation, core PCE, how much does that tend to fall over the same time period? 20 to 30 basis points. Not a ton on something like core PCE. The U.S. unemployment rate, how much does it rise over the 12 to 18-month period following the start of a recession? Again, looking at 24 months, I don't know why he says 12 to 18 and then gives 24 months of data. Unemployment tends to rise about 2 to 2.5% in the 2 years following a recession. What does the 3-month Treasury yield tend to do following a recession? Tends to fall about 2.5%. So short-term Treasuries do move a decent amount. And how much does the yield curve tend to steepen? About 2 to 2.5%. Again, kind of that difference between short-term and long-term rates. But Husband's point is, and again, this is if you're heading into recession, long-term bonds don't really move a ton in recessions. They can go up sometimes. They can go down sometimes. But overall, there's no clear trend over a small sample size. The meat of the movement that you see in interest rates is on the short end because the Fed tends to cut interest rates in a recession, and that's where you see the biggest movement. But so the question that you have in terms of investors moving to bond funds is twofold in my opinion. Number one is why now? And the answer is, hey, people might be more concerned about recession and they think interest rates have peaked. And the second part is, hey, is that a good move? And ultimately, it's going to depend on the particular path of, the recession, if there is one, because it's not a clear-cut thing that, hey, recession happens and all bonds see their yields fall. That hasn't happened in every recession necessarily.
And for what it's worth, retail investors pouring into the bond market, I would not necessarily take as a negative indication for the stock market. It's not as though flows into bond funds have been some sort of great predictor of markets peaking.
No.
That does not seem true to me. And so, in fact, I'm sure there are plenty of people out here who would say that this is actually, you should take the contrarian view on this. And wow, all these retail investors are putting money in bond funds. What does that mean for equities would be my question.
I also find this interesting. So they have a BlackRock executive, Rick Ryder, who I believe is their chief investment officer, who is calling this the golden age of fixed income. And look, Rick's a smart guy. If you're the CIO at BlackRock, again, you're no dummy. But I'm wondering who it's the golden age of fixed income for, because it would seem to me, A, if you started buying bonds in like 1982, that was probably the golden age when yields could fall from like 16% down to 0. But the other piece is, hey, if BlackRock is just collecting a whole bunch of assets, it seems that it might be the golden age of fixed income for then. But it's not like fixed income returns have been any good for the last few years, so what are we talking about here?
Golden age of fixed income for BlackRock specifically, maybe?
Maybe. Let's take a quick break here. When we return, Stack Roulette.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I am a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, resources, medical supplies, and much more. I work with disabled veterans every day and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
There's an issue cutting through the partisanship in Congress. It's AM radio. The overwhelming majority of legislators, Democrats and Republicans, support a bill to keep AM radio in cars. But time is running out. Text AM to 52886 and ask Congress to bring this bill to the floor for a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Mike, what do you have for me for Stack Roulette?
Initial results on the California fast food minimum wage law that we have talked a fair bit about. If you're unfamiliar,
ridiculed a fair bit.
Yeah, let's call it what it is, I guess. If you haven't been paying close attention, this is the minimum wage law in California that established a $20 minimum wage, but only if you work in fast food restaurants. This does not apply anywhere else. It doesn't even apply to sit-down restaurants or fast casual restaurants. It must specifically be the type of restaurant where you go to a counter, order food, and then go sit down. There's been a couple of pieces written, one today from Fox, another from the Wall Street Journal, citing some data. The data would indicate that since January, fast food restaurants in California have lost about 6,000 jobs. It would also conducted a survey of about 198 fast food chains and operators across California. They found that 98% of those surveyed had raised menu costs, 89% had reduced employee hours, 70% had cut staff. Look, all of this stuff is survey results, so I'm a bit suspicious of, it was 182 operators that they surveyed. That is a pretty small number when you're talking about the state of California. All of these would be logical things to happen, in my opinion, but I still think it's probably too early to measure this. And also, I know 6,000 jobs is a large number of jobs. It represents less than 1% of the total group of people working in fast food in the state of California, so I'm not sure that that is a statistically significant job cut at this point.
What industry do you think they should set the minimum wage for next?
What fun ones could they do that would just completely screw up their economy further? I don't know. Maybe janitorial workers?
What if you go high end with it? Like
investment bankers must make $250,000 a year in California.
Well, here's the thing. Like, if you look at the jobs where people get paid the worst, like in general, it's high demand and low availability, right? You try to get an entry level job in sports, and you literally get paid nothing.
Yeah, and other areas that people are passionate. Yeah, so sports,
entertainment, things like that. What do you think would happen
to some extent?
What do you think would happen if California said, you know what, we want to set a minimum wage for, I don't know, behind the scenes movie workers? What do you think would happen there? You think that would go anywhere?
Probably not.
Probably not.
Yeah. So this is foolishness. I don't think that you can measure the impact when we are only about 3 months out from this. I think that this foolish law that was put into place is going to be bad for the state of California. It's going to be really interesting to study. Unfortunately,
we won't know for a year or two.
We won't know for a while what the real impact is. And yeah, interesting that fast food jobs have increased in Nevada but decreased in California. But it's just probably not statistically significant at this time, and you just have to wait.
I want to just do a quick story here from the New York Times. Chase is barring customers from using credit cards to pay off buy now, pay later loans, which is actually something that makes an awful lot of sense. They're basically saying, hey, we don't want you to use credit to pay off credit because, well, you're not really doing anything here. And it makes an awful lot of sense. So this is going to go into effect in October, apparently, of this year. But on October 10th, customers of Chase will no longer be allowed to use their credit cards to pay off buy now, pay later loans. So there's that. Let's take a quick break for the rest of the day. We'll see you tomorrow. A whole lot coming up on the Financial Exchange this week. We'll see you tomorrow to get things moving.
Tax-efficient retirement planning starts with taking proactive steps to minimize